This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
So we are in the studio today with Deb Tuoto.
Tuoto. That's fun to say.
You just got to use the hands.
Did your kids have a hard time in school when the teachers were trying to pronounce their last name?
No. Remember, we'd homeschooled for
Oh, that's right. There you go.
And I had married an Atkinson, so they were...
What's an Atkinson? Oh, his
Atkinson.
last name is
Yeah.
an Atkinson.
Atkinson, yeah.
Not related
Swedish.
to Dan Atkinson from KCRA 3, right?
No.
Okay.
Not that I'm aware of.
Not that you're aware of. Maybe if you go far enough back, we're all kind of related. So.
Dan Atkinson is a legendary news reporter in Sacramento, probably the most legendary news anchor in Sacramento, Dan Atkinson.
Almost as legendary as that morning show guy on The Fish.
Yeah.
Matt Bijou.
That guy.
Yeah. So we're talking about the exciting topic of insurance, and while it's not necessarily riveting, when you need it, like you are so thankful that you have it. Yes. But sometimes people they think they have insurance and that they're covered, but maybe they're underinsured. So can you speak a little bit about that, Deb?
Absolutely. Also in cooperation with that, the fact that it's so much more difficult to get insurance now. How do we do that? And with the rate hikes and with having to go with California Fair Plan and a DIC, it's more than doubled for most people.
What's DIC?
So difference in conditions has to cooperate with the California Fair Plan, because the California Fair Plan only takes care of fire
and wind.
issues and wind. See, look at that.
I'm
you
learning.
Listened. And high winds. So you have to have another carrier take care of the water, liability, etc. All those other things. That's the difference in conditions,
DIC.
the RAP or the DIC.
Got
All that lingo goes together.
Got it. And so somebody, how can somebody be underinsured? Like, how does that come to be?
So with California Fair Plan, it's in a way a cafeteria situation. So the agent has to know what they're doing. So you put in what the dwelling replacement is going to be, and that's the key on that one right there. So sometimes agents will think they're saving the client money by making that a low value, but when I put that value in, I have to remember my client where I was standing in front of that pile of ashes. Did I feel good enough that that person was going to come into a situation that would bring them back to normal from their financial investment, correct? Yeah. Or if it was a family, are they going to get another home that they're going to be able to live in? So with California Fair Plan, they made a couple changes where you have to go to a replacement cost estimate, and every realtor knows that when you go into escrow, you have to provide a replacement cost estimate for the home. So we cannot be under that number. And California Fair Plan recently is also asking for replacement cost estimates.
So do those replacement cost estimates have to be updated annually?
Not so far, no.
Okay.
And so that's.
So if somebody bought an insurance and they've been in the home 10, 15 years and they haven't updated the value, maybe that's how they end up being underinsured?
So it will be, there is another aspect of insurance that will keep adding to the value of the home. Okay, but unless it's a super old home, then California Fair Plan won't do that.
Got it.
All right, so we've got California Fair Plan, we've got a DIC, and let's just say Anne has lived in that home for 30 years. She's been let's go with Farmers this time. She's been with Farmers for 30 years and never has made a claim. She's paid under $1,000 a year for that policy. It's a smaller end home, if you will, in California. Now she's looking at a policy that could be $13,000
a year. Yeah.
Right? So I'm on a fixed income. How do I do this?
Yep.
So when the California Fair Plan, you have to realize that you are only going to use that in a worst case scenario. So what I do for my clients is I really bump up that deductible. So instead of the $1,000 deductible that Anne is used to, we're going to be looking at a $10,000 deductible or a $25,000 deductible. Because when it comes to replacing her home, before the insurance company puts $500,000 into that home and you only have to pay $10,000, it's insignificant at that time.
Yes.
Right? And that's the only time you want to use Fair Plan.
Okay.
Right? So that's how we help save our clients on the rate of Fair Plan.
Okay, and you also so if somebody is, because I deal with this all the time in the foothills, and what's interesting too is the maps are changing. Like what's considered a high fire zone,
they always are changing.
Like I didn't realize. It just seems like where were we?
and they change between carriers.
Los Lagos. Valerie was selling a house in there, and turns out in Granite Bay, that's a high fire zone.
Yeah.
And we had no idea. So,
And here's a little bit more about the Granite Bay area and San Francisco. They're both going through similar situations. Is that usually the residents have been with some of the admitted carriers, State Farm, Farmers, Allstate, Kemper, Safeco, all those carriers that we're all used to hearing.
yeah.
All those carriers are pulling out of California for the most part.
Yep.
Right? So now all those residents are now looking for insurance. So where do you go? Right? So the brokerage, we have a couple hundred carriers that can take care of them, but not all of them are going to cover in that same area. So I go out to the carriers that are accepting. Now we may have to step out of admitted carriers. Admitted carriers are like those big carriers that I talked about. Admitted means that, let's just say Safeco covered all the homes in San Francisco. San Francisco burned to the ground. Then Safeco would have to go to the state to get a little bit more money to pay off all those policies. First off, Safeco would never do that, but I'm just saying as a story, right?
Yeah.
So that's what an admitted carrier is. That's the biggest aspect. Non-admitted carriers, there's two versions here. There's A-rated and there's B-rated. B-rated are just, they're going to be the ones that usually have the lower rates and a lot of times can, to me, and I'm sorry to say it this way, kind of are fishing people in. But when a catastrophe happens,
They won't
they're
pay.
gone. They're gone, right?
Yeah.
So we only work with the A-rated carriers. The A-rated carriers will offer full policies, but they're not going to be usually as expensive as a fair plan and a DIC for the most part. But they are a non-admitted carrier. But they limit how many policies they will take. So maybe I have this non-admitted carrier A on your home, on your block, and you're like, oh, everybody go see Deb. We have this carrier that will take care of us. And then the carrier's like, no, we're only going to do that house. We're not going to do any more in that area because then we won't be able to keep our A rating because now we're overextended. So that's what's happening quite a bit right now is carriers at max capacity for the area.
But what I love about your company, TWFG, is that you are a broker. Like, I didn't even know there were such things as insurance brokers until a few years ago. And do you mind just explaining the difference between like somebody who has gone to the same company and they do the home, they do the cars, they do everything,
Right.
But that's the so like a State Farm.
That's a captured agent.
Captured agent, that's
yes.
the term. Yeah, so a captured agent versus a broker.
Yeah. So if I'm a captured agent, like when I was with Farmers, I was a captured agent with Farmers. Farmers has something a little different, so maybe that wasn't a good example because Farmers does have a few other
Broker options?
Broker options, if you will. But State Farm, let's just say. State Farm is a totally captured agent. They just recently started doing California Fair Plan because they're not able to get more policies.
Yeah.
Right? And then as a broker, I am not a captured agent. I have, like I said, 200 carriers.
Instead of one.
Like
State Farm.
Yeah,
That's the one.
Exactly. So, like I said, I can find the right one for you and your situation. It may not be the same for your neighbor, and it may not be the same for the neighbor that's across the street. But I have a variety of options, and options are huge right now in this crazy insurance market.
Yep. I don't know how many times people come to us and go, hey, we need help with insurance. And then we end up referring them to a broker like yourself, right? Where go talk to Deb. Go talk to Deb, and because there's way too much. I can't. Normally it was just like go to this preferred guy at this one company, but they're not even writing policies anymore.
Exactly.
So now we're going to a broker, and it just feels like a little bit more safe. The clients like it because it feels like more options, and it's the white glove concierge service that you provide.
Yes.
Because like you guys you don't run ads. Like we won't see ads on the television for your company.
Nope.
It's referral based, and it really like we were speaking off the air about how to protect people because a lot of people think that their insurance premiums will only be affected if they file a claim, but that's not the case, right?
That's not the case.
So can you share a little bit
And they're going
about?
to be seeing that this year, especially. All the carriers are being allowed by the state of California to take a larger rate increase than they ever have. I mean, California is trying to entice the state farms and the farmers and all that to come back into play. let's all pray that that actually happens, because the more carriers, then we start talking about we have better rates, even though they're going to be higher, right?
Yeah.
Because if we have A, B, and C all offering for the same house, we need to, then the rate starts to come down. So that doesn't look like that's going to be happening anytime soon. But I know we're talking about homes, but it's also happening in the auto market right now.
Yes.
Right? The auto market, off the charts, crazy expensive right now. And there's no love going on. If you miss a payment, that's their excuse. They're done. Right? You've got to go somewhere else. So there's not really a shopping situation in the insurance market right now, right? You stay where you are. Now, you get in a new home. Something else that comes into play with the new homes is, am I going to be able to get my loan? Now, this is insurance is much more than what anybody ever planned on, right? So we are very good at trying to manipulate the numbers without underinsuring the dwelling.
Yeah.
Because that's illegal and unethical to me.
You can get the deal done, but then what happens?
And then what happens?
Yeah.
So I've done things where I've decreased some of the other aspects of the insurance.
Like, what would be a safe thing to decrease?
So, like, instead of water at 50,000, we go to 25,000.
Because it's not likely.
Yeah, and then what will happen is after escrow, I contact the client and say, okay, let's get this back up to where it should be. And then they just pay the difference, which is usually insignificant, but it was enough in dollar-wise to get them through the situation.
Got it.
But I'm not underinsuring them, right?
So you don't underinsure them, and you can also raise the deductible, or two ways.
So you can only have usually most carriers will only allow the deductible to be changed at renewal. So whatever the deductible is going in, that's what it's going to stay.
So you can't do a quick change there, but that's another way to keep your premiums low, is to increase the deductible.
You don't want to use insurance anymore for anything except catastrophic. You don't want to call carriers anymore and say, hey, should I make this claim?
That's what I was, let's talk about that, because I didn't realize just calling left made a mark on your what is it called, Clue Report?
So yes, Clue Report is there. Insurance record, if you will, like a credit record, if the type of
it's your FICO score for insurance.
Exactly.
Yeah.
So if like I had a client who called in she's like, hey, not to us, she was with another carrier. Should I make a claim? The roof leaked a little bit and got in. Well, they weren't going to cover the claim, but that claim is still on her record. Okay,
so that still impacts her.
That still impacts her. So they're not going to increase her rate. But what happened was, then there was a storm and she had a real claim, and then there was a pipe break and she had another real claim. So that's 3 claims.
Yeah.
So the carrier said,
well, 2 real claims, 1 call. And that was her 3rd strike.
That was it. So then she was done. So then I could not get her in with another admitted carrier. They wouldn't take it because the water claims follow the person. So even if she went to go live at another home and purchase that home, those water claims follow her there.
So even though the home that she may have been in previously maybe was older, maybe needed to be replumbed, she's now in a brand new home, brand new plumbing, she couldn't get insurance from an admitted carrier like a State Farm, Farmers Geico.
More than likely.
Really?
Yeah, I can't say all because, right, we don't know until you rate the particular home.
Okay.
So then we had to go to our higher end excess lines. And so now she's paying $9,000 a year for insurance versus the $956 that she had.
Wow.
Right.
And so, well, that's great too, though, that at least you have like a brokered options, like you have options for her to choose from. But this could have all been avoided if on that first call
she called me.
She called you instead of calling the insurance company.
Agent. Yes.
So if you're listening to this and you're thinking, hey, should I file a claim? Don't call the company.
Call your broker.
Call your broker.
And so with many admitted carriers and captured agents, they have to put that in the record.
Oh.
So that is another advantage of having a broker, because we're your liaison and we will help you through that.
It's almost like calling your lawyer, right? The lawyer's not going to necessarily disclose, to a third party what's going on.
That's a good way to put it.
So Deb the lawyer / insurance broker. So so that's a huge. That's my
huge.
biggest takeaway was.
Yeah.
Because we get calls all the time. Hey, I called my insurance company and they said they won't cover it. What they don't realize now is how long does that stay on your
so that's
report?
On various carriers. Water is usually, I've seen it on there 2 to 3 years.
Okay, so it's years.
Yeah. It's years.
Is there any way to get that information off, or is it just there?
I have not seen a way to get it off. If there is, great. I have not seen a way. It used to be that we could do that type of thing quite easily.
Okay.
It's just a very, very tough market, and carriers are just, they only want super clean records.
Okay.
Yeah.
So if somebody's looking to buy a home, in a high fire zone area, like, how can you help them better than, say, your average insurance company? Like, what would be your tips? You have choices. You have options.
I have options. I have ways to do this. And like I said before, California Fair Plan, yeah. People say it's the unfair plan, but thank goodness it's there. Thank goodness it's there. And our agency is very, very good in working with the Fair Plan. We have direct communication with them, and so I haven't had issues as much with them as what could be happening.
So the last question I have for you before we wrap up is the whole conversation around forced insurance.
Oh, yes.
Because this is something, again, like similar to being aware that you should call your insurance broker, not call the company when you have a question about a claim. Forced insurance, a lot of times people think they're saving money, or this is a hack. Can you explain kind of what it is and why it's bad?
So I had a gentleman last week. He hadn't paid his insurance bill, so of course the carrier cancels.
Yeah.
And then his mortgage company calls him and says, "Hey, we're going to do forced coverage on you."
Because you're required to have homeowners insurance.
Because you have to when you have a mortgage.
Yep.
It has to happen. And so the mortgage will put forced insurance on there, is what we call it.
Okay.
That insurance really only covers his mortgage.
And it's expensive, right?
And it's very expensive. So
if he's living in a house, he put 20% down, been living there for a while, it's worth $500, he owes $250. The insurance is going to be more expensive, and it's only going to cover that $250,000 balance, right?
So no water, no liability, nothing like that. And liability in California is huge right now. Huge. So he's not being covered. So I spoke to him and I said, "You are at great financial risk in this situation. Your mortgage is covered, but what happens if you lose that house? Worst case scenario." Because insurance, that's what I'm supposed to talk about. Worst case scenario.
Yep.
Right? So he's standing there on the street with his family and no house. Now what? Well, his mortgage is cared for, but he doesn't have any money to go invest in another home.
Yeah, no money, because it all went to the bank.
It all went to the bank. They get all the money for that, right?
Yeah.
And so let's just go to another side of that. Let's go with somebody who was walking up his driveway, tripped and fell, and decide they're going to sue him, right? They're going to sue him for a couple $100,000. That's so common nowadays. Where's he going to get that money? Not from insurance. They're going to garnish his wages to pay that $200,000.
Really?
Yeah. So it's pretty. A financial risk is not enough of a word for that, for the forced insurance.
That can change not only your life, but like your kids' lives.
Yeah, and your future.
Yeah.
Right. All your.
Yeah.
It's pretty intense.
And so I know I said only one more question. Can I ask you one more?
Yeah, absolutely.
Okay. So Airbnbs, we were just talking about this.
Yeah.
I have a dear friend. They're looking to rent out their home, and you were like, "Oh, they better update their insurance." I didn't even think about this. Like, what's the difference between regular homeowners insurance and Airbnb styled insurance?
So Airbnb insurance are short-term rentals. That means that the people don't have the love for the dwelling that you would as an owner, right? And the liability risk is off the charts. Right? Say they eat
tripping on the sidewalk again.
Right? Exactly. Yeah. Or they're drinking and something happens. Somebody hits their head. It's the major breadwinner. I mean, we're trying to go to worst case scenarios. That's going to be a huge liability suit, and it's going to be all on the owner. So the insurance is a little different. It's not that more expensive, but it is different.
It is different.
It's very different.
Okay.
Regular homeowners insurance will not cover any of that.
So there's homeowners insurance. There's like landlord type insurance, for like traditional rentals. There's Airbnb, which is short term. Is there any difference between short term and midterm, or is it all the same?
No, it's about the same.
Okay.
Yeah.
But if you're thinking about doing short term or anything along those lines, you want to make sure that your insurance is updated. So just reach out to your insurance broker.
Yes, because it's a completely different policy.
Okay.
If you will, it's just like if you had a landlord property. it's not, you don't throw a homeowner's policy on that landlord property.
Yeah.
Why? Because the liability is much higher.
Yeah.
And, on landlord, that's just open another can of worms. Landlord, you don't have the contents that you have to cover.
Correct.
Right? It's just the dwelling and liability are the main aspects.
Yep. So thank you so much for coming on the show today. We talked about the California Fair Unfair Plan, why it's special that we have it, and how to keep your premiums lower. We talked about the benefit of going with like a admitted carrier versus a broker, which is what you are. We have hundreds of options instead of one.
Yes.
We talked about how to avoid getting a mark against you with insurance companies by calling the insurance broker directly rather than calling the insurance company.
Yes.
And what else did we cover? We covered Airbnb insurance is different than regular landlord, even homeowners insurance.
Yes.
What's the best way, aside from reaching out to us? You can always just Google Made for More Realty. Ask, hey, who was that fantastic insurance, Deb Tuoto, that was on the show?
Be sure to use your hands.
And we can connect. Yeah, you got to use the hands and connect you. But if they want to reach out to you directly, what's the best way?
So the best way is actually email.
Okay.
I know that sounds so old-fashioned, but like we said earlier, we have a lot of clients that are referring to us because we have such amazing customer service. We still keep that as number one. So D Tuoto.
Tuoto.
Yeah,
Sorry, go ahead.
That's okay. D Tuoto at twfg.com. So that's D for Deborah, Tom, unicorn, ostrich, Tom, ostrich, at TWFG. The wood. Oh,
It's the name of your company.
Yeah, I know. It's the name of my company. TWFG. Tom, Wood, Frank, George.
.com.
.com.
Awesome. Well, thank you so much for being on the show.
Thanks so much.
So, Matt, I'm sure you've experienced something like this in the past. When you find someone who treats you well and has great customer service, you go back to them over and over again, which is why I have the same person been cutting my hair for the last decade. And that is
they're doing a good job, you think?
I think so. Do you not like it? I got to just cut. Anyway, Betty experienced the same thing. She worked with Johnny Jennings and the Tom Daves team at Made for More Realty to sell her home, which was a really tough situation that they had to figure out. And so when it came time to sell Betty's mom's home in Roseville so she can move into a retirement home, of course, Betty's first call was Johnny Jennings and the Tom Daves team at Made for More Realty. They did a great job once. They did a great job the second time, and she's continuing to use them and tells everyone she is the best because they found the perfect buyer for her home and negotiated a quick as-is sale.
Yeah, they won't cut your hair. They'll do a terrible job with that, but they will get you at least 3 cash offers for your home in as-is condition. No need to do open houses or showings or those much-needed repairs. At least 3 cash offers when you reach out to Johnny Jennings and his team at Made for More Realty because you expect more, so get more. Just Google Made for More Realty today and get more for your home. License number 1982-171.